There's the closing bell on Wall Street, and now it's market domination overtime. Jared Blucher going to be along in a moment to get you some details from today's session. I'm going to start with where the major averages ended the day. Down, in a word, kind of sideways movement once we fell out of the open for the Dow here, off by about 0.6%, about 260 points. Definitely Nvidia and big tech, a big part of the conversation today. We saw Nvidia kind of weak even into Jensen Huang's keynote speech at Nvidia's big annual conference, GTC. And then the market sort of not wowed by any newness in this speech. He fleshed out a lot of the product lines that are coming our way, but nothing that revolutionary or new in those comments. And of course, we're awaiting the conclusion of the Fed's two-day meeting tomorrow. No action expected, but as always, the answers to questions in the press conference could be market moving. So all of that said, the S&P 500 down as well, 1.1%, and the NASDAQ, the big loser of the day, down 1.7%. As I said, big tech very weak today. Meta going negative on the year. It was the last of my Magnificent Seven to be positive thus far in 2025. No longer, Jared.
Yes, 20 up days. Remember that? I think that was last month. Also, volatility picking up a little bit today. Nothing to write home about, but I'll give you the 3-day look. And this is after 2 days of coming down a bit from the high 20s. You can see it's about 21.79. Not the biggest deal in the long run, but still moving in the wrong direction. 10-year T-note yield just 3 basis points down. Not a big deal there. The U.S. dollar index also slightly lower. U.S. dollar index, let's check out the year to date. And we can see that is the lowest level of the year. So that could be significant. We're going to watch for some potential further drops, which in the old days meant risk on, and nowadays it's not always the case. So let's take a look at the sector action, and only a couple of sectors in the red, though we have 2, energy and healthcare. And in fact, over the last 3 days, energy is up 5%, financials up 3.4%, but let's get back to today, and we can see the 3 mega cap sectors, XLY, K, and C, those were down over 1% today, and the weakest of them looking to be consumer discretionary, that contains Tesla and Amazon. So Amazon down 1.5%, Tesla down 5%. I'm going to do a deep dive on some of these names in about 30 minutes here, but suffice to say we've seen a lot of weakness carry through, especially in those bigger names. Looking at our leaders board, not a lot of strength there. Small oil, we mentioned energy before. Good quality corporate bonds, that's LQD, and MJ is cannabis, so a little bit of everything in there, but nothing to write home about as well. The biggest loser today, the ARC components, and that's in this list. And here we see unprofitable tech doing even worse than a lot of those mega caps, led by this very large name, which is Tesla, but that kind of bucks the trend. Most of these names pretty small there, and just seeing some red across the board. Let's see if China is any hope or bright spot here. Alibaba, the biggest of them, that's down 3%, but we are seeing a lot more green. If we sort by equal weight, not even quite 50%, but there's a lot more green than we're seeing in some other sectors. And I will leave us on the Dow, and that's kind of a mix here too, although not much green to the upside. Verizon and Chevron up more than 1%. Nvidia leading the charge down there, down 3.43%. Josh?
Thank you, Jared. Markets are back in the red. That's after a 2-day reprieve. Investors weighing concerns about the health of the economy and also the reversal of the Magnificent Seven trade. Meta, the last of the group to turn negative on the year now. Joining us now is Sebastian Page, T. Rowe Price, Head of Global Multi-Asset and Chief Investment Officer. Sebastian, great to see you as always.
Likewise.
So we had the Nvidia event today, Sebastian. It's their big event, GTC. Investors didn't seem really too impressed. I mean, the stock finished down more than 3%. And we had an Nvidia analyst on, and we were asked about that stock reaction response. And he said, in part, this is just what he characterized as the mega AI trade and trend going, I think he used the word soft, right? If that AI trade has gone soft and it stays soft, can this market work?
I call it the tyranny of high expectations. Mm-hmm. Expectations were just so high for these stocks going into this. My colleague says we should stop calling it the Mag 7, but call it the Lag 7. Mm-hmm. You know, they're down 18, 20% in aggregate. I think the market can do okay if it broadens, but it won't be exceptional returns for the next 6 to 12 months without
How would you quantify that? What is not exceptional? What would that mean?
say mid-single digit returns for the next 6 to 12 months. From where we are, we've had a bit of a correction here. I think the word of the day, the word that you hear everywhere in the media, and I'm going to ask you how many times you mentioned it today, is uncertainty. But there is more than just the tariff headlines. Growth is softening. You see it in the economic surprise index for the US. We got into this with very high expectations, very high valuations. And then, yes, uncertainty. I asked State Street to run some data for me. They're able to see how many times a word is mentioned in the media by week, and they can go back 10 years. I had this feeling last week that everyone was saying uncertainty, uncertainty, uncertainty. By the way, we're boosting that number right now by mentioning it in the media. But
notice, you're the one saying it. We haven't said it in this conversation, at least.
Point taken. The last week was the highest frequency of the word in their media pool, which is a global media pool for the last 10 years, and that includes COVID. So it's the word of it's an unsatisfying word, because what it means is we don't know, we don't have a lot of insights, but we need to broaden this. Growth is slowing. I don't think we're headed to a recession, but the retail sales data that came out yesterday and the one before, not so hot.
So I want to go back to another word of the day, which is the broadening word that you mentioned as well. And I was looking at the ratio of the S&P equal weight to the S&P 500. And so basically when this line goes down, it means a narrowing of the market. When it goes up, it means we're broadening again. We're in a little bit of a broadening trend, but there have been several other attempts at that broadening that haven't quite made it there because the Mag 7, because mega cap tech, or the Lag 7, whatever you want to call it, has been so dominant.
Yeah, look, Julie, for 10 years. For 10 years.
Is that going to change at all?
I think we might have reached, for quite a while, peak market concentration. You see European markets do well right now. You see, value stocks do quite well, and we're long value stocks in our asset allocation portfolios. So for value trap to become something else than a value trap, right? By the way, I still think the US tech will dominate over time in the long run. But when you want to invest in a value bet, you have to have some momentum behind it, which we have right now, for example, with European and value stocks. And you have to have fundamentals justifying the momentum. With European stocks, you have real fiscal stimulus coming. It's been a long time coming. With value stocks, you have accelerating earnings relative to growth stocks. So you have a value proposition, cheaper assets. You have the momentum year to date, and you have some fundamentals behind it. That's the trade we're making for the next 6 to 12 months.
The international value trade.
International value in particular, yeah.
I want to go back to something you said, Sebastian, because you said US economic growth, you expect that to slow, not recession. But if you do expect it to slow, what does that mean for earnings revisions?
It's coming down, and that's part of the picture. It's still very high. Again, the tyranny of high expectations. We're still looking at aggregate expectations, consensus of 10 to 12% for this calendar year. That's a high bar to clear. And so, yes, it will have impact on earnings. But look, I'm not super bearish on markets right now. I think don't count the US consumer out. Wages are growing around 4%. Inflation's growing at about 3% if you look at the last 12 months. That means that, for the high-end consumers at least, you have wages growing faster than inflation. Unemployment is still low by historical standards. Just by the way, 4.1% compares quite favorably with 5.7%, which is the long-run average for unemployment in the US. So there is still a consumer here in the US to sustain some level of growth, maybe a bit slower, but some level of growth.
You're coming out with a book in about a month or so, called The Psychology of Leadership. And I know in that, but I want to talk to you about the book, but as it relates to investing, right?
Yep.
Because I know you talk about core beliefs
Yep.
in the book. What are some of the core beliefs of investing? And then how does that play out sort of in your day-to-day as you're making your decisions?
See, I love that question, because core beliefs simply indicate how you view the world. These are your assumptions, your main assumptions to interpret events. Well, investors have been conditioned on the trend is your friend. That's a core belief in investing, and it's been the right core belief for 10 years. And we've kind of forgotten another core belief in investing, which is buy low, sell high. Valuations matter. And when I look at this, I think we might be close to a tipping point where valuations, at least for a while, reassert themselves in the world of investing. And we have maybe a bit of a regime shift here.
How does that then play out in the market? What is that regime shift? Is it just about rotation? Is it about the declines that we're seeing? What does it look like?
I think it speaks to a broadening of the markets over time, to the value of portfolio diversification, which has been kind of hard to defend for a while. US large cap tech has eaten the world. Everything else has done worse compared to it. But also the return of what some have called the law of gravity in financial markets, the fact that you have a positive interest rate, right? We had this long period with zero interest rates or negative interest rates after inflation. So that is all part of that regime shift. And examining your core beliefs. How do you look at markets every day? Do you think the trend is your friend? Do you think valuations matter? Understanding your core beliefs and managing your portfolio accordingly is, I think, going to matter more than usual because of that shift.
Sebastian, always good to see you. Thank
Likewise.
you so much. Appreciate it.
Thank you.
Coming up, Bitcoin's been in a bit of a holding pattern in recent weeks. We'll be joined by an expert on the other side to discuss what the next catalyst for the token could be. Stick around, much more market domination over time still to come. Bitcoin has been in a bit of a holding pattern in recent weeks. The cryptocurrency stuck hovering around the 80,000 mark. Investors had been hoping that the White House's crypto summit could maybe spark a rally, but now they're looking for what the next catalyst might be. For more, we're bringing in Robbie Mitchnick, global head of digital assets at BlackRock, which of course has the biggest ETF that is pegged to Bitcoin. Robbie, it's good to see you, first of all. I guess, first of all, if you can help us set the scene by explaining perhaps why Bitcoin has not done better, right? There were so many hopes pinned on this White House, the big vibe shift, deregulation, and we have seen some actual concrete moves in that direction, but we haven't seen price follow. Why not?
Sure. Well, I think it's important to take some time perspective on it, right? Which is Bitcoin is still up, let's call it 15% or so since the beginning of November, right? So you saw a pretty extraordinary rally, right into the end of 2024. You've seen Bitcoin, the crypto market, give some of that back. I think that there were maybe accelerated, perhaps premature expectations of just how quickly some of these catalysts would start to arrive. Our focus now, as we look at what's to unfold in 2025, is more about the pace of institutional and wealth advisory adoption, which has showed, frankly, a lot of momentum coming into 2025, and that hasn't really abated even in this price environment.
So I'm interested, given that, what do Bitcoin ETF flows look like? What have they looked like? What do you expect ahead?
Yeah, well, obviously 2024 was pretty incredible, pretty historic on that front. 2025 to start has been more negative. We've seen some outflows in the category, relatively modest in the context of the overall asset base, which is close to 100 billion, just over a year into their existence. A lot of that outflow that we've seen so far seems to be a little bit of hedge fund unwinding of the spot futures arbitrage trade, and less so in sort of the more long buy and hold directional investors that make up the fund. So you've seen the yields that hedge funds were clipping in that trade, go from double digits to low single digits, and that's, I think, a lot of what's driven some of the outflows we've seen.
Robbie, as you know, there are a lot of different reasons that people buy and hold Bitcoin. But as you also know, it's frequently referred to as digital gold, right? A store of value. Here we are in a period of time where people are feeling nervous about the economy, and it's not performing like gold. Gold is performing like gold. People are buying gold, but they're not buying Bitcoin. Can you help explain what's going on there?
Yeah, I think it's a fascinating thing, Julie. What we've seen is, if you look at Bitcoin fundamentally on a long-term basis, it really seems like an asset that should be uncorrelated or even inversely correlated against certain risk factors that exist, right? But there are periods where it does have these short-term correlation spikes. And what's interesting is some of what we've seen lately seems to be self-fulfilling and actually a self-inflicted wound by some of the research and commentary that the industry does, leaning into this idea of it as a risk-on asset at times, which really doesn't make a lot of fundamental sense when you think about what it is. It's a global, scarce, non-sovereign, decentralized asset that exists outside of any one country's economic, political, or monetary system. And so that fundamentally, we think is what the long term is. That's why people think of it like digital gold. But you see this short-term trading correlation, and it can be a little bit self-fulfilling, at least in the short term, where before people would focus on, okay, well, higher rates, that's going to hurt Bitcoin the same way it hurts, equities. That makes some fundamental sense. But now it's been extrapolated to things that don't really make any sense at all. Tariffs, it's not clear that tariffs are any fundamental bad for Bitcoin. Economic fears. I mean, I don't know if we have a recession or not, but a recession would be a big catalyst for Bitcoin. And certainly the way the market seems to be commenting on it doesn't reflect that.
Well,
today.
unless if people have less money, they have less money to buy Bitcoin, right? Or if there's the wealth effect of people having less money in the market in stocks, they have less money to buy Bitcoin.
Sure, and that's part of it on a short-term basis, but ultimately why I make that comment is Bitcoin is long liquidity in the system, right? It's catalyzed by more fiscal spending and debt and deficit accumulation. That happens in a recession. It's catalyzed by lower interest rates and monetary stimulus. That tends to happen in a recession. And it's catalyzed to some extent over just fears of general social disorder, right? And that too, unfortunately, is something that can come up in a recession. So the market has almost, it seems, gotten this in some ways, not particularly well calibrated, but that's where the opportunity comes in for education in a market and an asset class that's still very nascent, right? And so we've been doing a lot of that in terms of education around our clients, helping them see through some of these conflicting narratives that seem to be out there.
Speaking of education, educate me on this, Robbie. So eager to hear your take. Trump authorizes this strategic Bitcoin reserve. Big question is still, is the U.S. government going to buy Bitcoin, right? What's your view on that? And can that be done in this kind of budget neutral way that's been discussed?
Yeah, I think a lot still to be determined on that front. What we have clearly seen is a pretty emphatic signal of support and conviction in this industry, and particularly in Bitcoin and Bitcoin's uniqueness within this category. So whether and on what timeline and how exactly that might be funded, there's a few different sources that they could use to start to accumulate some Bitcoin. I think that's TBD. Obviously, we're watching that. Lots of investors are watching that, but it's certainly not the only source of adoption catalyst in 2025.
And also, I would ask about the administration. There have been some questions between the Trump coin, the reports that the Trump family might be investing in Binance. I mean, I know that you guys in the industry have worked really hard to institutionalize it, to legitimize it. There have been some setbacks, as we know, SBF being a big one. Is this another setback? Do you think that it's at cross purposes of trying to make the industry more palatable to a broader swath of American investors?
I think that what's happened in 2025 in terms of, a little bit of a price correction is more about just things getting perhaps a little bit over exuberant coming into the start of the year. So there's some healthiness in the correction there. Obviously, there was a hack at a major Asian exchange that had an impact on confidence. So that's playing in the market. But what I can say is when we're talking to, and I'm talking to some of the most sophisticated long-term Bitcoin accumulators, they're pretty excited about this dip. They see this as a buying opportunity. They certainly don't look at economic headwinds and say that's bad for Bitcoin. They say that's probably a catalyst for Bitcoin.
Well, to be fair, they are always pretty.
That's true. That's true. But some of them, we're taking chips off the table a little bit in the hundreds, and now they see this correction, and a lot of them view it as sort of an irrational sell-off based on short-term factors. I don't know whether that's true or not, but certainly there's a lot yet to be sort of understood and processed about this asset and how people think about it from a risk return perspective and in a portfolio and how the correlation should play out over the long run. So we're trying to play a role in that. Lots of other financial institutions that have come into this space are trying to bring some quantitative rigor to that as well.
Robbie, always good to see you, especially on set. Thanks for joining us.
Thank you.
All right, time now for What to Watch Wednesday, March 19th. Starting off on, of course, the Fed. The Fed's interest rate decision for March will be coming out in the afternoon. Wall Street expecting the Fed to hold interest rates steady this time around, but we'll be getting an updated dot plot, the Fed's summary of economic projections. Fed Chair Jerome Powell will also be holding a news conference following the decision. Yahoo Finance's coverage tomorrow will begin at 2 p.m. Eastern.
And taking a look at earnings, another round of reports coming out tomorrow, including General Mills, Williams-Sonoma, and Five Below. General Mills will announce results for the third quarter in the morning. Analysts expect a grim outlook for the company as consumers continue tightening their belts. The stock has been sinking. It sank last week after Health and Human Services Secretary RFK Jr. met with big food companies, and he told them that the Trump administration wants artificial dyes out of the food supply before Kennedy leaves office. That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. They've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.